For the longest time, India has been considered an emerging power that has refused to break forth. Being 3 years older than China, it tags behind China in almost all areas, in economy, military, technology, and even in pollution control. The major problem is, India just might be catching up a little too slowly. Apart from speed, India and China have other differences like contrasting forms of government. In spite of this, a lot of similarities are seen in particular aspects of their economies and government. In 1949, China became a communist republic. This was the same year India adopted its constitution. Also, both countries began rebuilding in 1950. Although at the time, India was the largest economy in Asia even after almost 2 centuries of colonial exploitation. This is why it remains a shock to the world that China, which was a poorer country than India, now controls the world economy. At this point, it is safe to say that India has a lot to learn from China. Recently, China's economy has faced some struggles caused by rising political risks and declining growth. It is thought that India could take advantage of China's impending doom as a stepping stone for its advancement. But on the contrary, it doesn't appear so. As a matter of fact, the U.S. has, for years, hoped to assist India to rise in a bid to curb China's strength. But even though India is one of the world's fastest-growing economies, its economic policies, such as high tariffs and tax barriers, continue to discourage Western investors. For one, India's growth is attributed to its large consumer market rather than increased foreign direct investment. While India seems comfortable with this, its Western partners see India as a challenging place to do business, according to the U.S. State Department's 2021 Investment Climate Statement. Also, according to the Heritage Foundation's 2022 Index for Economic Freedom, India ranks 27 among 39 countries in the Asia-Pacific region, with an overall score below the regional and world averages. From the perspective of the U.S. and other Western partners, India cannot catch up with China without overcoming the large gap in the relative size of their economies. China currently has a nominal GDP of $17.7 trillion, while India's GDP stands at only $3.1 trillion. On the other hand, India is expected to surpass China as the world's most populous country in 2023, raising its domestic challenges of providing food, education, and employment for an expanding young population. Given its economic gap with China and the needs of its growing population, it is expected that India focuses on foreign direct investment. But between 2019 and 2021, the share of global FDI inflows to India have shrunk from 3.4% to 2.8%. Meanwhile, China's share of global foreign direct investment rose from 14.5% to 20.3%. Comparing these two ancient civilizations is necessary. This is because the differences in the growth and results of India and China are born from the differences in their policies and processes. China is a one-party autocracy that mobilized its homogeneous Han and Mandarin-speaking majorities behind a decades-long campaign of radical reform. India, on the other hand, is a diverse multi-party democracy that has always struggled to get its hundreds of ethnic and linguistic minorities together to achieve a single goal. Going back to the very beginning. While both countries began their post-independence building in 1950, China's leader was Mao Zedong and India's was Pandit Jawaharlal Nehru. In the 1970s, China got weary of the stagnation and chaos they were suffering under Mao. Soon, the owners of the big companies were losing their control over the economy, making the people resolve to till their own land or leave the interior provinces in search of work. They created economic zones free of heavy bureaucratic control in coastal cities, where new jobs flourished. The authorities also closed thousands of rusting state factories, which threw tens of millions out of work. With no social safety net, many were forced to find new livelihoods in the burgeoning private sector, which was responsible for the subsequent decades of double-digit growth. India, on the other hand, has never had a record of mass retrenchments and large-scale migration to promote growth, in large part because its leaders fear the people would punish them for the short-term upheaval and pain during the next elections. As a result, India has seen a much more gradual shift from rural to urban, farm to factory, state to private sector than China has. Most Indians still live and work on the farm, with the population being 70% rural. Booming new cities are as rare in India as they are common in China. Many business sectors remain largely owned and operated by the inefficient state. In recent times, India has tilted towards free market reforms. However, it was only under pressure from economic crises, not as a steady long-term strategy like China. India has continued on a path of gradual change, however slow, which is acceptable to the countless communities in India's fractured electorate. A one-party system is indeed working well for countries like China, Korea, Japan, and Taiwan. But turning India into a one-party state will not lead to the easing of land acquisition laws or labor market rules or the downsizing of state companies. Instead, it will leave the overburdened state less money to invest in roads, ports, and electricity plants. India, being one of the world's most populous countries, is essentially more of a continent than a country, with states more varied in language, culture, and ethnicity than the nations of Europe. When Narendra Modi became Prime Minister in 2014, it was hoped that he would do for India what he had done as Chief Minister in the state of Gujarat. That is, build a fast-growing economy like China's, with an efficient bureaucracy and advanced factories attracting billions in investment from multinational corporations. Well, it didn't play out that way. It is very important to note that these nations are evolving along very different paths. China toward free market communism, India toward state-dependent democracy. This is why India has failed woefully while trying to imitate some of the steps the Chinese government has taken. One of such times was when China created a cashless society by allowing its tech giants to create software platforms that accommodated such. Within just a few years of doing that, cash has completely disappeared as a medium of exchange in the big cities like Shanghai and Beijing. When India tried to do the same, it didn't work out quite as well. India set to reciprocate the same result by state fiat, suddenly withdrawing all big bills overnight in late 2016. The result was not a sudden shift to digital forms of currency. It was a shortage of the cash, a total disaster that is still affecting India's economy today. Does this suggest that India would have been better off under an autocratic government? Not at all. For every authoritarian success story like China, there are multiple failures like Cuba, Venezuela, or North Korea. China got lucky with good leadership is an exceptional case, not a model for India and other developing economies to copy. In actual fact, considering the nature of India's population, autocracy will not be a good option, especially because many of the 29 states see themselves almost as separate countries. In India, whenever the prime ministers try to centralize more power in Delhi, a revolt is usually triggered by the people and state leaders. It cannot be overstated that India is better viewed as an entire continent, even more than it is as a country. The variations in language, culture, and ethnicity make it so. Therefore, its economy is best managed one state at a time, by a democratic leader close to local conditions, not by an authoritarian regime at the center. Following China's arrival on the scene as a world power, the hope was that its economic freedom would lead to political freedom. But that dream has been dashed by the tightening of the Communist Party rule under President Xi Jinping. The hope for India, which became a democracy when it was still very poor, was that political freedom would lead to economic freedom, but that dream has been undermined by a long line of statist prime ministers. There is still reason to believe in India's economic prospects, but hope won't come from prime ministers in Delhi. It will come from dynamic chief ministers in state capitals. So, India's economy will experience the much-desired growth if more power is given to the state leaders. Truth be told, India is better off accepting its diverse and democratic nature, giving its state leaders more authority to govern themselves, than trying to be the next China. There are prospects for India's eventual economic boom, should the right things be done. Subscribe to this channel to stay updated on India's progress. Meanwhile, please like and comment below. Thanks for watching.